Apple. It has been at the top of the tech food chain and at the top of our portfolios for some of us for the better part of 15 years, and for even more of us, perhaps even longer. So is this the time to sit down and buy the dip, to really take a major chunk of change and buy more of the stock for the long term? Or is it time for some of us like Warren Buffett and cut some shares loose? Let's go ahead and break it down. I am cutting this video right down the middle, and I'm going to give you some reasons to consider selling Apple and give you some reasons to consider buying more, and then I'm going to tell you what I'm going to do with the company as well. Right now, at the time that we are recording this, Apple right now is up just 0.5%, 0.5% in the last 6 months, and up just 5% over the last year, which compared to all of tech is utterly unacceptable. We, as investors, cannot take a 5% return in a world where we've got other tech stocks up 96%. Other tech stocks, we're talking like Nvidia, up 215%. We can't do that because the money that you have invested in Apple right now could have been making 215%. Right? We are talking about opportunity cost here. So if you have, and obviously, you know, how much when you invested matters and all that kind of stuff, but that's the term that we're talking about, opportunity cost. The money that you have in Apple that only made 5% in the last year could have been invested in Palo Alto Networks or Nvidia or Supermicro Computer or any number of other companies that did much better. So the question is, what do we do? All right, so first, let's talk about the reasons as to why this could be a signal for you to sell. And then we'll talk about signals that you may want to buy more. And you decide what you want to do. So first, iPhone sales were down 10%. This is where they make their money. Okay, the vast majority of their money is made from the iPhone and services around the iPhone. For many, this has been the major complaint about Apple. They are an iPhone company. Now, most people, especially when Apple was founded, and I would really say closer to the 90s and perhaps even to the 80s, they were a computer company. They were a Mac company, and that's what they were seen as. But as they moved into the 2000s and they really started to become known as the iPod and iPhone company, that's pretty much all they did. That's all they were known for, and that's really where their revenue shifted. Well, now they lost 10%, or really, you know, their revenue from the iPhone dropped double digits. That is pretty significant. They haven't seen that type of loss in a very long time. Now, the question is, why? And that really brings us to number two. Inflation is a big reason as to why we consumers have been dealing with inflation for quite a while now. We've talked a lot about it. We did a video earlier this week about inflation and about the Fed. You guys can check that out right after this video. But the main thing is this. With rising cost of food, with student loans coming back online, and we had talked a year ago about what the impact was going to be once student loans came back online. When we have our money having to go to other places, what was going to be cut out? One of those things was buying the latest and greatest iPhone. Was apparently going to be one of those things. So if I have to pay another $300, $400, $500 per month on my student loans now, maybe I'm going to hold on to my phone just a bit longer. Perhaps if gas prices are a bit higher and if groceries are a bit higher, maybe I don't need that iPhone. Perhaps I'm just gonna, you know, stick to the one I have and just keep it pushing until the wheels fall off of that iPhone. That is kind of what Apple is starting to see here, and it's one reason why revenue has dipped, and another reason why the stock has started to dip as well. And I don't know what the solution there is going to be for Apple, and they haven't really found a solution as to what they're going to do about getting people to buy the next iPhone. I think we've all known this, and we've all said this in one way or another. What was the last iPhone that they've had? Or really the last Apple product they've really had that's been like, ooh, this feels new. Yes, they've had the Vision Pro. No, it didn't work. I told y'all when it came out, I wasn't like really impressed by that. That's a conversation for another day. But what was other than the iPad, I guess, was the next thing? Like, oh, this is really great. Like, the iPhone has been the same for a very long time now. You just put out a new one and put an extra camera on it again. They're all the same. Okay, like give us something new, give us something special, and they have not done that. They just keep releasing the exact same phone over and over and over again. I think people have caught on to it at this point, especially when we don't have all the additional savings, all the extra money laying around like we may have had 2 or even 3 years ago. So that is two of the things that they're dealing with. A 10% drop in iPhone revenue, and they're dealing with consumer pressure from inflation. So two of the three things. The next thing is, can they make any progress in other markets? So I don't know if enough investors or even consumers realize this. Yes, Apple is dominant here in the US. You can throw a rock and get an iPhone user left and right. That's easy. They're saturated here in the US. It's just like, I would argue, McDonald's and Starbucks. It's very easy to find McDonald's and Starbucks everywhere. The key for McDonald's and Starbucks to do well is to grow internationally. That is the exact same thing for Apple. Can you get good at selling in India? Can you get good at producing and getting customers in China, in Turkey, and everywhere in between? Can you get them to use your product? Now, the question there truly is, can you get them into that ecosystem, and can you get them to do it in a way that you have in the States? Now, the problem is going to be the ecosystem that works here may not work there. So in Europe, they changed the chargers. That has been an annoyance to me, right? But we've started to get on board there. But an example, the whole like green text and all that type of stuff that has gotten into a lawsuit and is an annoyance and the whole picture thing. Well, when you're in a country where everybody does not have it and you're the outlier, right? Well, what happens when that dynamic is different? And whereas the iPhone user is the one that's outnumbered and they feel differently, and that it's a social dynamic. They may not feel the same, right? You may be the one that's on the opposite side of that. I say that as someone who was an Android user and an iPhone user and vice versa. So in a different country, I wonder how that feels. If you're in a space where it's easier, like here in the US, if you have a Mac and you have an iPhone and all that stuff works together, that's all good and fine. In a different country, that may not be the case. So I'm just curious as to what the adoption is going to be and what the ecosystem may be and how easy that cultural adoption is going to be in those other places. So I'm curious as to how that is going to work and if they are going to get a lot of headway in those places, because that is the only place that you're really going to grow, because here you're saturated. Okay, we've all got the same phone at this point. Y'all got the same ringtone at this point, and we sick about the exact same phone. Y'all ain't showing me nothing new. Okay, at this point in time, and people are really entrenched in their ways. You don't find a whole bunch of people at this point switching from Android to iPhone and vice versa. People are stuck and they just keep renewing every 4 to 5 years at this point in time. And obviously, with costs going up, you start to see that revenue drop. They are going to need to find a solution. So those are the reasons as to sell. What are the major reasons as why you may want to buy? As we're getting to those, make sure that you sign up for my free workshop on how you can set up and create your first six-figure investing plan, take from point A to point B, how to start investing, what accounts do you need to use, how do you get from point A to point B, and why six figures, $100,000, is so important to get to, as really show you from not just beginning to end, but really how to work backwards, because that is the key to investing, knowing where you need to start, but using that to work backwards to figure out exactly what you need to invest in. It's free. The link is here. The link is in the bio. And let's go ahead and continue. Okay, so we talked about the negatives, reasons why you might want to sell. Another one, a bonus one you want to throw in there, Warren Buffett sold some shares. He didn't sell it all. He did not sell it all, but he did sell. Warren Buffett is not really known for selling. But reasons why you might want to buy. So first one is this. Services. Okay, services are up 14%. That's an all-time high. So we're talking about the subscription services, the subscriptions around the iPhone were up 14%. One could argue that they may not really be in the hardware business per se, they're in the subscription services business. So I've got you on the iPhone, I've hooked you on that. Now I'm getting you to pay $6.95 or whatever the cost is for the Apple Cloud service. I'm getting you to pay that instead. So you're not buying a new iPhone every year, every 2 years. I'm getting you to pay $14.95, whatever it is, every month, and you're really paying me the exact same amount. And they're getting you hooked on that, on the streaming service, on their storage service, and whatever else is out there, Apple Health and all the other things. That is what they're trying to get you to do. And that, again, was up 14%. Which is, again, an all-time high, and that is a good business model because ever so often you are going to have to upgrade your hardware anyway, and they're going to keep you in that revenue model. That is something that is quite strong, and anytime you hit an all-time high, that is usually a pretty good thing, and that revenue model is quite sticky. I would argue that that is something to applaud, and it is something to look forward to for Apple. And the more they shift to that revenue model or the subscription model, I would say that that is something that is encouraging for them. The next thing, they did announce a major share buyback. For those that don't know what a share buyback is, they're taking their own money and they are buying back their own shares on the market. Now, there are some pros and cons to doing this. The pro and con is really that opportunity cost that I mentioned to you earlier. They have a massive stockpile of cash that they could take and build the next thing, the next big thing, but instead they're buying up their own shares. Now, the good thing for investors is this does boost the stock price, because if you're taking $100 billion, then that's going to boost demand, right? There are less shares that are going to be out there in the market, and the stock price will slowly climb over time. If you own shares now, just like the stock has in the past, should continue to go up. Now, we'll argue, though, and I've looked for studies and I haven't really found a conclusive one just yet. Apple, I would say, I think it's over the last 10 years or so, has been the leader in stock buybacks. Okay, now Apple, with the exception of 2022, has been one of the market leaders in stock market returns. Okay, so you could argue that they've been buying back their shares, and it's one of the reasons why the stock has done well. You could also say y'all been buying back shares and the stock has not done well in the last year. You can look at that any way you want. It's really your perspective and what mood you're in. So again, depends on how you want to look at it. But they are buying back their own shares. In my view, the way I'm looking at it, I would assume that it is going to help out the stock here pretty soon. The next thing that you do want to pay attention to, and I would put this in the buy category, is they're seeing record sales in other markets, including Turkey and India. Now, record sales doesn't mean necessarily a significant number. It doesn't mean billions and billions of dollars. It just means, now I'm not being literal here, but a record could be one, a record could be two, right? It is a record. It doesn't mean that, it really knocked your socks off, but it does mean that they are making some progress there. So remember, on the sell side, hey, you need to make more progress in the international side. Also on the buy side, hey, you did set a record. So that does kind of break even, but they are seeing record sales and record revenue numbers from some of the international markets that they are starting to kind of break into. Turkey and India being just two of some of the markets that were listed in their earnings call. So those are some of the things that you do want to pay attention to. So yes, they do need to get more progress on the international front. Yes, they are making some headway there. Yes, they are buying back their own shares, but also iPhone sales are falling, but also they're seeing record revenues from the subscription side. It really comes down to how you want to view and interpret those particular results. What am I doing? Right now, I am in a holding mode. So as most of you guys know, what I do in my own portfolio, as I am transparent and tell you guys everything I'm doing in my portfolio for the most part, is every June and December is when I sit down and I decide what I'm going to buy and sell. And at this point, I do not see a reason to sell Apple. I am disappointed in Apple. I'm not necessarily happy with Apple, but I have not lost any money with Apple at this point. Okay, and Apple has not hit a red line where I got to get up and just get up and sell, right? Even Tesla that we had talked about before. I wasn't happy with Tesla, but Tesla hadn't hit the sell button for me, right? But it's that of like, hey, I'm not happy with you, but I've been invested for a very long time. I'm still a long-term investor. I'm just going to continue just riding this out. I do think if you have been invested for a while and you are concerned, or if you have a very significant sum, this can be a time where you can trim just a little bit and make sure that your portfolio is balanced. When I say balance, I like to say, again, if you want to make sure everything is even, say 5% across the board, you have 5% in every single stock. But as time goes, you can have 10% over here, 8% over here. You may want to say, all right, well, let me just cut everything even, sell what I need to, add here and there to make sure I have everything at 5%, and do that every 6 months just to make sure everything's even. Cut the grass, right? Cut your hair, whatever metaphor you want to use to make sure your portfolio is even. So when I come and look at my portfolio in June, that is what I'm going to look to do. So I'm looking at my portfolio. If Apple is not at, let's say, 5% of my portfolio, I'm either going to sell it to get to 5%, or there is a scenario where I will add money to it to get it at 5%, leave it alone, check it in June, and then make a decision at that point. So that's what I am going to do with Apple. However, what are some other stocks that you may want to consider getting rid of? What are the ones that you may want to sell and avoid right now? This is the video that you want to watch next.